Hey, everyone. How are we doing? Super excited about today's Women We Are Whole, Healed, and Wealthy conference as we're coming to, I believe, the last week of Women's Month. And we're going to start talking about business and profit margins and creating wealth. We talked about so many things these last 3 weeks, everything from relationships to marriages to mindset to mental health. And today we are going to talk about business and understanding a profit margin. So, to everyone who has a business, and if you know someone who has a business, I want you to go ahead and tag them. Take a moment and tag every person that has a business. We are going to talk about profit margins. Let's go. Yes, if it doesn't make money, it doesn't make sense. So, we want to make sure we get all of the entrepreneurs on this call today. Start tagging. Yes. Thank you. Thank you. Great evening, Sister Phyllis. Thank you. Great evening. Great evening. Great evening. Great evening. Sister Cherise. We have a treat for you today. A phenomenal woman of God with such wisdom, as we are waiting for you to tag. If you're up here, let me know where you are joining me from today. Logging into Women, You Are Whole, Healed, and Wealthy. Whole, healed, and wealthy. I'm going to do my tagging and my sharing as you do your tagging and your sharing. And then we are going to bring up the woman of the hour, as she is going to do some teaching for us today and some wisdom for us today. Excited about this. So go ahead. I'm sharing. I'm
Teaching for us today
sharing
and
right
some wisdom
now.
for us today. Excited about this.
And let's see. Let's get everybody who is an entrepreneur. Let's go. Let's go. Let's go. Let's go. Okay, I'm doing my tags and then we're going to get started, okay? I want to say thank you to everyone that has been sending all of the amazing congratulations out to me today, in regards to the acquisition of a half of a block to do some development, um, some ground up development. And I'm excited about that. I look forward when it's my turn to talk and teach about wealth. Thank you for joining us throughout this whole month. And we are going to get started. All right. Thanking God for doing amazing things, amazing things, amazing things. I look forward to tell you my testimony when it's my time, but tonight it's not my time. It's Cadorsil's time. So let me introduce this amazing woman. First of all, I'm going to say she is an amazing woman of God. She is a millionaire mindset sister. She is a wife. She is a phenomenal mother. She wears multi hats. She's well educated in the financial world. She is educated in insurance, as she did insurance teaching for us previously. She is a woman that wears so many hats, and I'm just blessed and honored to call her a sister. um, she is also an entrepreneur, so not only does she teach wealth, but she lives that entrepreneurial lifestyle, a business owner. She's the owner of Kate's Connection. You can go ahead and follow her on Facebook. It's Kate, Kates Connections with a Connections, and it's financial services. Cadorsil has been the owner operator of Kate's Connection since 2012. 13 years in business, 13 years of financial service, 13 years of educating people. So we have the best here today to share with us as we go into the wealth portion of our women's conference. Women, you are whole, healed, and wealthy. And we talk about in the sisterhood how it's important that we have multiple streams of income. We also emphasize the ability to sign our own paychecks, meaning being entrepreneurs and being in control of our own financial future. And as wonderful as it sounds, um, I must say that it's not that easy as it may sound. It's not that easy. Sometimes you can be running a business and running a business in the red, running a business that's not profitable, and you just don't know how to even figure that out. And that's something that is very common, more common than you would probably think. So today, I'm gonna bring to stage our presenter, Sister Cadorsil Falcon, as she teaches about businesses and profit margins. Let's give a round of applause. Let's send some love as we send great Sister Cadorsil to the stage. Let's send her some love. There she is. All right, give her some love, guys.
Hello. Hello,
Hello,
everybody, and
everybody,
let's
and
put
let's
some
put some
hearts
hearts
out
out
for
for
our
our
chieftain
chieftain
who
who
provides this
provides.
platform for us and cares enough, okay, cares enough for our professional development to put together a conference like this. So thank you so much, Chieftain, for the opportunity and for the platform. Thank you, sisters, for coming in to support, whether it is you trying to grow yourself or just showing support. You're sharing, you're tagging, getting this information out. So we appreciate all that you do and how we support one another. Just love it, love it. So I am keeping an eye on Facebook too, so I can see the sisters coming in. But all right. So I am going to share screen. So last time I came to you, I was talking about sisterhood. So I was wearing that mental health, so to speak, that mental health hat. And tonight I'm putting on the financial services hat. So here we go. All right, give me 1 second. All right. And okay, hang on. Okay. Hopefully, all right. Hopefully, you guys are seeing my screen, and Chief is going to give me that confirmation. If everyone's
Everyone's
seeing the
seeing the
screen,
screen.
Yes, we are seeing the screen.
okay.
Okay.
We also
All
see
right.
the side screens as well.
The
The
sec-
side,
oh
Oh
yeah,
yeah.
side.
I
I
didn't.
didn't.
Thank you.
Thank you.
There you
There
go.
we go.
There we go.
Yep.
All right, thank you so much. Okay, so tonight, so I'm going to put a disclaimer out there that I'm not the best when it comes to fancy presentations. So, but I would tell you the content is where my concern is at and making sure you guys have the right information and trying my best to break this down so that it is you can leave here and know how to determine your profit margin. Okay. So we'll dive in. So if you have a notebook, you have a pen, grab that so that if you think of questions along the way, then write them down. So at the end, as our protocol is, we'll take some questions. Okay. So all right. That being said, here we go. So basically, our agenda is to understand what is a profit margin, and how to determine it. The tax forms that reflect whether you had a profit or a loss. Essential financial habits for small business owners, because I know that's generally the target market here. So what are the habits that will help us to be successful and to be profitable, right? And then distinguishing a business from a hobby through profitability, okay? Because we'll get into that. But whether you have a true hobby or whether you actually have a business, no matter what your intent is, okay, the profitability is going to determine the difference. Um, and then strategic investment decisions based on your return. Okay, how based on what you're making, that helps you to determine, what you can do with your business and in your business. And then, of course, boosting. How do we boost profitability? Because everybody wants to know that part, and how do we do it through collaborations, through our credit and through business planning. All right, so we got a little ways to go. I'm gonna move. All right. So, understanding profit margins. All right. The first thing I want you to understand is that if you have a mindset block and you're just like, it sounds like math and oh my gosh, it's too hard, right? It's not that hard, right? I promise y'all, this formula is super simple. Okay. It's not like the stuff you see on the screen. Okay. So, the first thing we want to do is define profit margin and its importance. Okay. So a profit margin shows how much earning remain from every dollar of sales after expenses are deducted. Okay. It reflects a company's operational efficiency and pricing strategy. All right. Significance of a healthy margin is that it indicates like you have strong cost control. You basically what's coming in, what's going out. You're in control of that revenue generation, and you understand what it takes to scale your business. All right. Industry benchmarks, small businesses net profits typically range between 5% and 20%, varying by industry, okay, standards and market conditions. So I will say if you have a product business, these numbers are probably more real for you. If it's a service business, it's probably going to be higher just because our expenses tend to be lower, okay? And you'll see that coming up. All right. So here is the formula. Okay. Well, first the definitions, okay, because there are three types of profit. The main types of profit margin you'll hear is gross profit margin, operating profit margin, and then the net profit margin. All right. We're going to focus on, I think, the more simple one, which is that net profit margin, which they usually refer to the basic profit margin. Okay. But the difference is that gross is just taking the total revenue. Then the operating profit is revenue minus cost of goods sold and operating expenses. Okay, so it just kind of breaks it down a little bit. And then net profit is revenue minus all expenses. Okay, so it's basically everything that came in minus everything that went out. Okay, and then that's how you determine that net profit margin. Okay, what is the money that actually hit the bank, right? A lot of times when I tell people if I'm doing budgeting, I always say budget on your net and not your gross. And sometimes people get that confused. Which one is your net? Which one is your gross? Right? So the net, if you think about it like this, that if you were if you actually had a literal net, right, a physical net, and you had a bunch of stuff in the net and you throw everything up in the air, what falls down and remains in the net what remains is the net, right? Is the net. Like it's basically what I'm saying is the money that you actually have left over and what hits your hands, right? The gross is everything that went up, but the net is what remains in the net. Okay, so if that helps you to remember gross versus net. But basic, so again, that basic profit is okay. The formula is profit margin equals the net profit divided by the total revenue multiplied by 100 for the percentage value. Okay. So whenever we use the word margin, we're talking about a percentage. Okay. The profit is right, the total revenue minus the total expenses. But as soon as you put margin in there, now you want to convert that number to a percentage. Okay. So I'm going to show you how the actual an example of how to do that in a minute. But all right, so benchmarking profit margins, compare profit margins against industry standards and competitors to assess performance accurately. Okay, so if you are in the car sales business, all right, then a benchmark is you comparing your profit margin to other car salesmen, right? So just basically the industry standard. All right, identifying margin signals. Now this is important here. Low margins may indicate inefficiencies, okay, meaning there's probably some waste or you're just being very inefficient on how you use your dollars, okay? While high margins could signal underinvestment or risk. Okay, under investment or risk. So what does that mean? Is that when you have a lot of profit margin, now you could be doing fine. You could be doing everything well, but it could indicate that you are not investing enough in your business, or you are not taking enough risks, right? And if you don't do those two things, you're going to mess up your profitability in the end, because if you don't invest much, you're not going to get a good return, right? So we need to plant enough seed so that we can actually get a harvest out of it. All right. So okay, so financial decisions, interpreting margins aid in tax planning and financing decisions by revealing true business health. Okay, so by looking at the profit margins, especially over time, that tells you the health of your business. Okay, or if you're looking at investing in someone else's business, you want to know that about their business, because are the numbers fluctuating so greatly, each year? Is it too tight? There's hardly any profit, that you're not going to get a return, right? So like it's just going to tell you different things. So it's kind of, you can almost look at it almost like the credit score of the business, if you will. If you look at your own credit score, over time, the last 10 years, that's going to tell me your bill paying history, your financial habits, right? It's gonna tell some things about you. Um, so it is with profit margins, okay? The health of your business. All right. So what I did here was I'm giving you guys an example of my actual profit margins. Okay. So I looked back, so I could look at these and look at these percentages, right? So first, on the left side, you see again the formula net profit. Okay, so I had to look at how much money. Now, how was I able to do this? Okay, I think I showed on another screen, but basically, I just went to my tax returns. I looked at Schedule C. Okay, we're going to talk about that in a minute, but Schedule C as in cat. All right, and basically, I looked at line 31, which tells you if you have a profit. Okay. I'm sorry. I did look at that, but I looked at line, I want to say it was line maybe 11, but whatever line it was, I'm probably getting that mixed up with adjusted gross income. That's line 11 on 1040, but it was one of those lines, something like 6 or 7 or whatever, on Schedule C, which tells your total revenue, right? Your total gross revenue. So you take that line, and then basically, I'm sorry, your net profit on line 31, you divide it by that total revenue line, and then you multiply by 100, and that's how you get your net profit margin, right? So I get a number there, and that percentage. So that's how I determine these percentages. Okay. So if you have not filed a Schedule C or a profit loss statement, it's going to be a little harder for you to figure out, but you got to figure that out first. You got to figure out what was your total revenue, then what was your total expenses. You got to get that number right, and then you do the math. All right. But basically, in 2024, I had 53%. Again, I am a service-based business, right? 53% profit. 2023, 55%, 2022, 63%, 2021, a negative 8.73%. So that was a loss, right? So now what I'm looking at on the right side is, how do I process these results for decision making, right? For just analyzing and also future decision making, right? So the first thing you want to ask yourself when you look at these numbers is, what caused the difference, right? You see, in the last 2 years, I was pretty much the same. I haven't did my taxes yet for 2025, so that's why that number is not up here yet. But basically, it says, what caused the difference? You want to ask yourself, all right, what, and then, so, clearly think about it, right? Why was there a loss in 2021? Right? There may have been a loss in 2021. We were coming out of the pandemic. I know, right, that because my business pretty much I sold to people 90% face to face in their home and maybe 10% online, like a lot of salespeople did prior to the pandemic, right? And then when the pandemic came, we started doing so many things, virtual, right? But it was figuring that out. It was also having a baby that year, not doing as much business, taking maternity leave. So a lot, that all of that caused this loss. Okay. Um, so you just need to know like what happened, right? You want to analyze those results. Okay, now in 2022, I kind of bounced back, right? Figured it out. We were functioning virtual at that point, and moving forward. Okay, baby was in daycare, stuff like that. Okay, so but what caused the difference, right? So then, what do I want to do with the profit? So these are like high. Now it doesn't say it's a lot of money, right? You don't know how much money I made. You just know the profit margin, right? You don't know if this represents $100,000 or $15,000, right? So it's not telling you how wealthy a person is. It's just telling you how efficient they are with the money. Okay. So so I see there is a high profit margin. So then I ask myself, what do I want to do with this profit? Remember before we said if we don't, it could be an indication I'm not taking enough risks or I'm not investing enough. Okay. So in those years, right, again, we were very cautious to put money out and invest in things because we didn't know what the world was going to look like or whatever, right? But then I went back to work in 2023, full-time job, along with still doing the business, 2024. And then I kind of figured out like I should invest more in my business, right? Like I think I have the cash flow, right? I was like, I think I have the cash flow to invest more in my business. So, and had I been looking at this deeper sooner, I would have made some more investments. But my life was kind of crazy to say the least. And then baby number two came, the new job, you got to get used to the new job. The new job was very demanding, took up most of my time, so then you're so busy, and I want y'all to hear me closely. Like a lot of business owners, this is where we are. We are so busy just working our business, making this sale, going to this, making that sale, making that sale, but we not working on the business, right? We're working in the business. We're not working on the business. So I had not stepped back to look at things, right? Like I just knew I had enough money to run stuff, but if you would ask me 2 years ago, what's your net profit margin, I wouldn't have been able to tell you, right? Like, it's when you slow down. So you're going to have to be intentional to schedule a day to look at your finances in this way. All right. But basically, then I asked myself, where should I be investing more? Should it be in marketing? Should it be in building systems? Should it be in branding? Should it be in my own personal development? And then if you have a product business, should you be ordering more product? Is it time for you to open a store? Should you get a website? Should you be doing more vending? Right? Like you have to answer these questions. So, then you say to yourself, what will bring the greatest return on investment? That's how you're going to um, basically know where to put the money. That's also another big area where I think people make mistakes is that they'll take money and it's just like, oh, I need more of this or I need to do this. And they're not really thinking through what is going to bring the greatest return, because you might put the most money in, let's say the product that sells the most, but that might be a low cost product, or maybe what you enjoy doing the most, but maybe that's not most profitable. Okay. Maybe you love going to, oh, I need to increase my clientele, so I'm doing all these networking events, and you're paying to go to all these networking events and all these conferences, but how many clients how many leads is it really generating you? And then out of those leads that you got from the networking event, how many were you able to turn into clients, right? Or customers? So how many collaborations or partnerships did you make out of that? What is the return of investment on paying for all those networking events and those conferences, right? So that's what you really have to look at. And then here's a question that we also don't ask ourselves much is, and especially and it's not necessarily, I would say, what assets can I buy? It's not necessarily the question you want to ask yourself first year or two in business. Or if you're very new, like you got to get the cash flow going, right? But once cash flow is going, and again, it doesn't have to be a lot, right? You don't have to be rich, but once you have cash flow where you can cover your overhead expense and things are kind of flowing, then you want to start asking yourself, how can I get my money to work for me? Right? Because I'm now like, me working for money is kind of, that's going kind of smoothly, right? So now we need to turn the tables and say, how can I get my money to work for me so that the business can actually start building some wealth and you don't always have to trade time for dollars, right? So one of the things that I decided to do also this year was to start investing in assets. Now again, because it's not like, it's not, and I'm not sitting on, hundreds of thousands of dollars, right? So I'm not going to do something risky, right? But I purchased a very conservative asset where I know I'm not going to lose the money, but it's going to give me a higher return. Okay. So that's what I'm doing with the business money. Now, um, who is my target market? These are other questions. I'm not going to answer this personally, but I'm just giving you all rhetorical questions. Okay. You got to ask yourself, who is your target market? What do they need? What is the value that your business you need to bring to them? Are you actually reaching them? All right. And then who is your competition and how are you different from them? Okay. So these are all things, places like where you can invest in your business. Okay. All right. So now let's move on to tax forms that reflect profit or loss, which I've already mentioned, right? Which is the Schedule C. All right. I'm amazed to know how many business owners do not know about Schedule C because you're not documenting anything, right? You're not tracking your business. And so when you don't track your business, again, it may or may not be a business, right? But this is literally a snapshot of a fictitious Schedule C here, but this is how the form looks, okay? But basically, it just helps you to understand whether you had a profit or a loss because you're writing out your expenses and your revenue, okay? So key financial components, it includes detailed reporting of gross receipts, cost of goods sold, and operating expenses for accurate tax calculation. All right. So now hear me, y'all. Okay. If you do not keep your receipts and you don't track your expenses, you will not be able to do this form, right? Tax time is going to be an utter nightmare for you trying to go back through bank statements, find receipts in your pocketbooks, the fourth pocketbooks that you've been switching back and forth throughout the year, right? Right? So you need to either get an app. If you're very like technical, get an app, right? So that you can scan your receipts in, okay, and do things electronically, get some accounting software, whatever, okay. And if you know you're not good at keeping up with paperwork, this way when you get a receipt, you scan it in, you can throw it away, right? Whatever. If you are like me, which I'm trying to change, but I'm still kind of old school where I literally keep my receipts in a shoebox. I'm not proud of that, but I say that for people who need to know that they can start from somewhere. Okay. So I know I need to upgrade. All right. But the point is that at least I have a system of tracking. All right. And when tax time come, I pull out all those receipts and I got to add them up. So yes, there's still a lot of work because I need to do this stuff by next year. I declare that I will not be doing it that way anymore. But I can track it, right? And if the IRS decides that they want to audit me, I got all my receipts, I got all my invoices, whatever, right? So that's the whole point I'm trying to push here is the tracking. You have to track your numbers. If you don't, you will not know whether you made a profit or a loss. You don't know whether you have a business or a hobby. You don't know where you should invest. Like you have nothing to measure. You have nothing to um, go by, right? So this is very, very important. All right. Tracking your numbers. Also, um, it just tells your business performance. All right, so moving on. Now, if you have an LLC, you're going to use that Schedule C. If you have a corporation, like your tax structure is a S corp or a C corp, you're going to use the Form 1120. But most there are so many LLCs, so that's why the Schedule C is talked about a lot. But if you have a partnership, you're going to use 1065. All right. So you just got to know the right forms for you. Accurate tax form completion ensures compliance, reduces errors, and supports optimal tax outcomes for business profitability. What do we mean by that? We mean you're going to be able to take advantage of the deductions. All right. So if you are not keeping your receipts of your expenses, you can't deduct them, which means you are paying taxes on more of your money, which means you are less profitable. Okay. So some of us, we don't necessarily, I mean, we all want to make more money, but it's not necessarily about making more money. It's about being more little anal about your deductions so that you actually increase your profitability. Okay. So it's two ways to make more money. Well, really three, but you either make more money, right? You either decrease your expenses or both of them. Okay. So that's how you can increase your profitability. All right. Now, importance of precise records. We talked about that. And even if you get an audit, you'll be able to prove it. And also when it comes to getting funding, all right. If you're trying to get a loan, if you're trying to get a grant, they want to see documentation. So a lot of times, and I'm going to say folks that look like this, right? Folks that look like this, right? We want to cry about how government and institutions are discriminating because we didn't get the funding. But I'm going to tell you, working with folks look like this, we don't document a lot. All right. We don't document enough. And so we make ourselves ineligible or we disqualify ourselves from the opportunity to get the funding because our paperwork is not in order. Okay. So that is really, really important. Okay. So here are some habits. Okay. So I just beat you over the head with the expense tracking, right? So we need to track our expenses. We need to control our overhead costs. Um, Benefits of real-time monitoring. So you need to like not just do this one time a year at the end of the year during tax time. If you can kind of check out your progress at least quarterly, some if you can do it monthly, that's beautiful, right? But I'm gonna say at least quarterly, right? We're busy, but if you can look at things, so just put an appointment in your planner for with yourself every quarter to say, let me look at my numbers because you'll know, okay, we're at the end of the first quarter right now. Am I on track for what I said I was going to do, what I was going to make? If I'm behind, now I know I need to like pivot or make some changes for the next quarter, etc. Right? Or if I'm really doing so well, then maybe I can make an investment in something else that I wasn't thinking about spending money on, but I'm like, oh, maybe I can go to conference, or maybe I can, whatever, invest in myself in this way or, that way. So it's very important to have like that real time monitoring so that you don't miss opportunities either. Okay. All right. Building and reviewing expense and revenue projections. So again, that's kind of what I'm saying. Okay. Regular looking at things regularly. All right. Staying organized. So We need to adopt digital tools that I just talked about. All right, routine financial reviews, document retention policies, and automated invoicing, improve data management and accuracy. Now, y'all know we ain't got no excuse for all this AI and all this digital things, right? So, we need to take advantage of electronic means to automate. Okay, when I'm teaching people how to save, that's my keyword: automate, 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 right? That's how you stay consistent. So it is with your business tracking. If you can make things automatic, you're going to be a lot more consistent. Okay. So now, if you want to screenshot this, what I did was just took like some very like the top 15 tools for expense tracking, which will range from, some of them are free, some of them they will range as high as 25 a month, some are like $5 a month, $10 a month, whatever, to have these tracking services. Okay. So, all right. Now, moving on, distinguishing a business from a hobby through profitability. I wanted to get through that. Okay. So, the number one thing to determine whether you have a hobby or a business is your motive, right? Are you planning to do this to make money? Now, I know I'm talking to a lot of business owners. So, I can assume that your plan, your intent is to actually make money. That's number one. Then, do you put in the time? Okay. Do you put in regular time? Do you have a schedule? Just like when you have that 9 to 5 or that 8 to 4 and you got to clock in, do you have yourself on a schedule? And do you respect your schedule? Okay. And set boundaries with other people to make them respect your schedule, so that they understand that you are working. Okay. It doesn't matter if you're working from home, but you are working. All right. So, do you have a regular time? Do you depend on the income, for your livelihood, or is it just like your extra little stuff when you want to go on vacation? Right. And then, classification affects tax deductibility and reporting. Businesses can deduct more expenses than hobbies. Right. So, if you are formally a business, if you have a tax structure, meaning you're a LLC, a S corp, C corp, whatever, then you're going to be able to deduct those expenses. While, if it's a hobby, you can't deduct expenses, right? So some of you want to be a business, but you're not doing these things, and so inevitably you are a hobby. Okay, so basically, this is what I'm saying here. Income from a hobby, yeah, it must be reported, but expenses related to it cannot be. Okay, so is your hobby, here's two ways to look at it. Is your hobby making so much that you need to formalize it, right? Because some of y'all, you do what you do, you're a master of it, but it's not a business. I just like doing it. I do it whenever I want to, right? But you need to make that thing a business, because it's like everybody loves it, right? Everybody gives you great reviews. You get a lot of referrals. You're turning away business. You need to make a business, okay? Then there's other people who, you're saying you have a business, but you don't track anything. Your schedule is horrible. There's no regularity. You're very inconsistent. So you're running it like a hobby. That's the truth, is it's a hobby. Okay. So we need to be honest with ourselves. All right. And basically our impact on financing, again, if it's a hobby, you're not gonna be able to get loans and grants for the business because it's a hobby, right? If the IRS wants to come and audit you and you don't have things documented, again, they're not auditing hobbies, they're auditing businesses. Okay. So maintaining accurate business records and operations is vital. Okay. Classification and related negative consequences. Okay. You want to avoid negative consequences. All right. I'm mindful of our time, so I'm speeding along here. Um, you want to maintain detailed records. You want to develop a business plan. A business plan. If I was in church, I would say turn to your neighbor and say business plan. Okay. All right. So a business plan. Develop a business plan. What does that mean? Okay, that doesn't necessarily mean you have to have this formal document in a template or whatever. It means you have thought through what you want to do and you have counted up the cost of doing that. All right. And you've determined that the return will be greater than the investment. Okay. If you do those three things, basically you have a business plan. Now we can still work on the details. All right. But you got to think through this stuff, right? A lot of us, we're just like, oh, I'm good at making t-shirts, so now I'm gonna make a business. And you just go buy a machine and then you start putting social media ads up and now this is my business, right? But there's no business plan. You don't know who your target market is. You haven't determined how many t-shirts you need to sell in order to break even, in order to make a profit, etc. Right? So we need to slow down, work on our business, all right? And then basically, showing profitability efforts. Does the business show that you've made an effort to make a profit, and do you use a formal structure? Okay, so basically this is our last section. All right, strategic investment decisions based on your return. Okay, so how is this going to help you make decisions? So evaluate your marketing, technology, staffing, and inventory to identify growth or cost saving investment opportunities. Okay. You need to look at every area in your business and see if there's an opportunity for growth. All right. The data, because you've been tracking, is going to help you to spot inefficiencies or market trends, and show you where to allocate different, your capital. Okay. um, Investment returns. So here, I just want to give an example on how I've been able to use this. Like marketing investment yields is a 5-to-1 returns. Technology upgrades boost productivity by 20 to 30%. Right. So we need to use technology. That's not a secret. All right. Jewelry making business. I used to make jewelry. I was doing that for raising money for missions and everything. And I was able to make money and raise money for missions through the jewelry making business. But why did I let it go? Because the cost to produce, when I had to look at the time it took to make the jewelry, the cost of the pieces, the cost of my vending events, then I looked at how much I would actually make from an event. It didn't make sense. It didn't make sense, right? Even if I was profitable, I was it was very little profitable, right? It was very little, like maybe I made $200 or something like that, but it wasn't enough for me to like have a livelihood or something like that, right? So what the reason why I'm giving you that example is because I analyzed the data, I was able to make the decision to stop doing that, right? And do something that would be more profitable. Okay. I also did the same thing on how I determined when I used to be a homeowner. This is how I determined why I needed to sell my house for the same thing. I was putting more in my house. It was draining my budget, and it was more than what it was worth. Okay. So um generally we think of real estate as an asset, and if it's a good piece of real estate and it's gaining value, then it is an asset, right? But all houses are not assets, right? They can be liabilities. All right, so we need to keep that in mind. All right. So basically, calculating and interpreting your return of investment. I'm giving you an example here just of the jewelry sales. And so, I came to the conclusion that basically, well, I'm giving, no, I'm sorry, this is not my real numbers, but this is just an example using the jewelry sales. And that if I profited 200, I spent 300, this is how you would determine your return on investment is just it equals the net profit minus the cost of investment divided by the cost of investment again. So you can see I had a negative 0.33% return on investment, right? So again, knowing your numbers is going to help you to make a decision. All right. So prioritizing investments for maximum profitability. So again, you just want to sit down and think about, where should you invest the money you need to count up the cost to figure out where you're going to make the greatest investment. And so that just takes some time to sit down and think. And a lot of times it's just that simple, but we don't do that. And that's why we miss the opportunities. Okay. So, and lastly, I just want to close with boosting profitability with collaborations, credit, and business planning, because that's what this conference is all about, is those collaborations. Basically, I just want to ask, with whom does it make sense for you to partner, right? If you go by yourself, and I said this when I did the sisterhood, if you if you go by yourself, right, you can go faster by yourself, but you can go further together, right? You can go further together. So collaborations will increase your profitability if it's good collaborations, okay? And just sharing space, sharing products, sharing costs, all of that. Okay. So think about, who does it make sense for you to partner with depending on your business. Okay. The importance of maintaining good credit. We all know, if we have good credit, that we're going to pay less for things. We're going to get better rates, which means our overall costs will be lower. We will have access to more funding and higher funding at better rates. So all of that matters. Okay. And then our business plan, again, I talked about that. Just understanding, thinking through, understanding what the plan is, so that you're not making mistakes because, like, you made them and now you figured out you made a mistake. But and some of that you can't help. You will fail just as you move along the way. But you know what I'm saying, like impulsive mistakes, because you were just moving too fast and you didn't think through things through. So we want to avoid those things. All right. And so basically my conclusion, so we can take some questions and comments here, is financial metrics are important. We need to understand the profit margin, in order to make better business decisions. We need to keep records, good records, and we need to strategically invest our money. We need to make strategic collaborations, and we need to be intentional about our credit. All right, so that we can be profitable and have sustainability in our business. All right. So I really hope that y'all gained a lot from that. I know it was fast and it was a lot of content, but prayerfully you were able to take some good notes and be able to determine your profit margin. Okay. And with that being said, thank you so much. I'm going to turn this mic back over to our lovely chieftain, and she can facilitate from this point on. Okay. Okay. Thank you so much. Okay.
I'm talking and talking. I was muted. I
I,
was
I
hitting.
thought it was
thought it
me. I
was
was
me.
like,
I
I
was like, I
can't hear
can't
you.
hear you.
It was me with a big mouth. I was hitting. I'm just going on saying great information, great information. So yes, it was fabulous information, and I was just sharing how Sister Phyllis was saying it was an excellent presentation, and she was saying thank you, and she's like, she definitely needs to be more structured. That's great that you see that, because I often say in the sisterhood we cannot fix what we don't see. So this is great. So Sister Pat is saying it's wonderful, sending hearts to you as well. Are there any questions before we let Sister Cadorso go? Great information. I have a question. I know you gave a list of some apps that can be used, you said, and that is to track your finances.
Yes.
Yes.
Are there any apps, if there's any one, since April 15th is almost here? Is there any apps or any suggestions that you suggest we do if we haven't tracked 2025 very well? How do you suggest we go back and handle that?
And
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 you're
you're
saying
saying
how,
how
okay, you're
okay,
saying
you're
like a
saying like a
template of
template
where
of where
put the
put the
expenses
expenses
in.
in.
Or is there a software that you suggest we use that can help us to organize if we have to go backwards to organize
Mm,
because we didn't organize 2025 and now we have to report?
right,
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 right.
right.
I mean,
I
with
mean,
that
with
kind of
that kind of
thing,
thing,
I don't
I
know
don't know
about an
about an
app. I mean,
app.
the
I mean, the
apps may
apps
allow
may
you to
allow
go
you to go
backwards
backwards
too,
too,
but
but
I would
I
think
would think
more of
more
the
of the
accounting
accounting
software, like
software, like
your
your
QuickBooks
QuickBooks
and
and
things like
things like
that, because
that,
you can
because you
always
can
go
always
back
go
into
back
those
into those
spreadsheets
spreadsheets
and put the
and put the
numbers
numbers
in.
in.
Mm-hmm.
So that's
So
the
that's
best
the
thing
best thing
there.
there.
Like do a QuickBook
Right.
Right.
in QuickBooks. Okay, good. So accounting software.
Mhm.
And with
Yeah.
Yeah.
QuickBooks, you can download and it can automatically connect to your bank accounts. So you don't have to
Yes.
manually put in
Yes.
those transactions, correct?
Yes. And
Yes.
some
And
of the
some of the
apps do
apps do
integrate
integrate
well
well
with
with
the
the
accounting
accounting
software. So
software.
that's
So that's
also
also
something to be
something to be
intentional about.
intentional
Like
about.
if you
Like if you
already have
already
an
have an
accounting
accounting
software,
software,
then you want
then
to
you want to
see if
see
the
if the
app
app
you're going to
you're going to
get
get
is
is
compatible with
compatible
that,
with that,
and
and
integrates
integrates
with it.
with it.
Yeah. So what if
Yeah,
what if someone is doing a hobby and they don't have an accounting software? Do you suggest they get it?
I would
I
say
would
if
say
it's a
if it's a
hobby,
hobby,
you could
you
keep
could
things
keep things
simple and
simple
just
and
do an
just do an
Excel
Excel
spreadsheet.
spreadsheet.
You
You
know,
know,
like you,
like
because
you, because
it'll
it'll
allow you
allow
to
you to
track,
track,
or you could
or
get
you
an
could get an
app.
app.
You could
You could
track,
track,
but
but
you don't
you
have
don't
to
have
be
to be
maybe
maybe
so,
so
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 accurate,
accurate,
because like
because
you're
like
not
you're not
doing
doing
taxes
taxes
for it,
for it,
you
you
know.
know.
But
But
technically,
technically,
you are
you are
supposed to
supposed to
report
report
the
the
income
income
from a
from a
hobby because
hobby
it is
because it is
income.
income.
But it's
But
just a
it's just
lot
a
of
lot of
people,
people
they
they
don't,
don't,
but you are
but you are
supposed to.
supposed to.
Yeah.
You're supposed to.
Supposed to.
So
So
you
you
should be
should be
tracking it.
tracking it.
Okay.
Yeah.
Yeah.
All right. And
Yeah,
anyone that
and I
And
think
I
it's a
think
good
it's a good
idea
idea
to
to
track it,
track it
because
because
if you
if you
find that
find that you're
bringing
bringing
in
in
20,
20,
$30,000 from
$30,000
this
from this
hobby,
hobby,
maybe
maybe
that's
that's
telling
telling
you I
you
need
I
to
need
make
to make
this a
this a
business,
business.
you
okay.
You
know?
know?
Yeah. And those that have a business that say they have a business and don't have accounting software, what is
Yes.
your
Yes.
suggestion for them?
Yes.
Yes.
I'm gonna
I'm gonna
say,
say
if you
if
are a
you
type
are a type
person that
person
like
that like
you're
you're
really, if you're
really
a
if you're a
spreadsheet
spreadsheet
person and you
person
can
and you
handle
can
this
handle
stuff
this stuff
yourself, then I
yourself,
would
then I
say
would say
get the
get the
accounting
accounting
software and
software
start
and start
working it,
working it,
right?
right?
If
If
you're
you're
more like
more like
me, I mean,
me,
I
I mean,
can
I can
handle
handle
basic
basic
Excel
Excel
spreadsheet,
spreadsheet,
but
but
when it gets a
when it
little
gets a
more
little more
complicated than
complicated
that,
than that,
I'm going to
I'm going to
tell
tell
you
you
the
the
best
best
place to
place to
invest is
invest is
probably
probably
hiring an
hiring an
admin
admin
and letting
and
them
letting
do it,
them do it,
you
you
know,
know,
because they're
because
going to
they're going
learn
to
that
learn
stuff
that stuff
for
for
you. They're
you.
going
They're
to
going to
put all
put
those
all those
numbers in
numbers in
for
for
you,
you,
and you don't
and you
have to
don't have
worry
to worry
about that
about
level
that
of
level of
detail.
detail.
Okay, awesome. So there you
Yeah.
have it. Do we have any more questions before we let Sister Cadorso go? Yes, yes. All
Yeah.
Yeah.
right. Well, thank you so much for sharing your time, your knowledge, your wisdom, and also your guidance on how to make sure that we know if our business is profitable or not. It's a very important conversation to have.
It
It
is.
is.
And thank you for showing us how to calculate that, to look at the percentages and to see, and then also what those percentages mean. If you have a
Mm-hmm.
low percent and if you have a very high percent, what
Mm-hmm.
that means. So thank you for taking the time to share and to break that down for us. You have been
Yes.
phenomenal and we thank you very, very much.
Mhm.
Yes.
And
Thank
Thank
you.
the
you.
comments are just still saying that everything was wonderful and you were fabulous, and I concur.
Thank
Thank
you.
you.
Thank you
Okay.
Thank
so
you so
much.
much.
Any final comments? Give us some final comments before we go out, and please let everyone know how they can find you if they want
Yes.
to hire you for a
Yes.
consultation or for financial resources. Please let
Hmm.
everyone know about that, please.
Okay.
Okay.
So
So
again,
again,
my
my
business is
business is
called
called
Kate's
Kate's
Connections
Connections
LLC.
LLC.
I do
I
also
do
want to
also
put a
want to
little
put a little
plug in
plug
here
in
for
here
every
for every
Friday
Friday
morning.
morning.
I do a
I do a
Facebook
Facebook
Live
Live
called
called
Sisters
Sisters
Fitness
Fitness
Fridays.
Fridays.
So,
So
where if
where
you're
if you're
interested
interested
in
in
increasing
increasing
your
your
financial
financial
literacy,
literacy,
please
please
tune in
tune in.
there. It is
There
also
is
a
also a
Zoom link.
Zoom link.
So if you
So
are
if you
not
are
on
not on
Facebook,
Facebook,
you
you
can
can
watch it through
watch it through
Zoom.
Zoom.
But
But
I can be
I can be
reached at
reached at
973
973
787 5076.
5076.
Again,
Again,
that is
that is
973
973
787
787
5076.
5076.
Okay. And
Okay.
then my
And then my
email is
email is
cblue,
cblue,
NAA,
NAA
at
at
yahoo.com.
yahoo.com.
Okay.
Okay.
And
And
lastly, I
lastly, I
also
also
thank you so
thank
much
you
for
so much
putting
for
my
putting
number
my
in there.
number in there.
Just
Just
also want to
also
put
want to put
in
in
for
for
my
my
admin,
admin,
Jaleesa
Lisa
Thomas,
Thomas,
who does
who
so
does
much
so
for
much for
me
me
in this
in this
area.
area.
If
If
you do
you do
need a
need a
competent
competent
admin,
admin,
I just
I
want to
just want to
promote
promote
her,
her,
and I will
and
put
I
you
will
in
put you in
contact with
contact
her
with
as
her as
well. Okay,
well. Okay,
she is
she is
watching this and
watching this
she's
and
in the
she's in
chat
the
now
chat
as
now as
well.
well.
So,
So,
all
all
right,
right,
thank
thank
you.
you.
All right. So there you have it. Thank you so much. I love the presentation. Have a wonderful, blessed, productive day. And all right, sisters, we will see you tomorrow, 7 p.m. Eastern Standard Time for our next presenter. All right.
All
Bye-bye.
right, bye.
Bye.